Well, first of all, I would not cast this discussion in who wins or loses. We have a mandate to take care of, and we will do what is necessary to achieve our mandate. You already mentioned that at our December meeting, our president announced that rates would still have to rise significantly to levels that were sufficiently restrictive to ensure a timely return of inflation to 2%. The current situation is not satisfactory in that respect. And what we've seen thus far is data that has not been encouraging from our end. We've seen one more inflation reading where there was no signs of abating of underlying inflationary pressures. So we have to do what we will have to do. And core inflation has not yet turned the corner in the euro area. And that means that the sort of market developments that I've seen over the, let's say, last 2 weeks or so are not entirely welcome from my perspective. I don't think that they are compatible, actually, with a timely return of inflation toward 2%.
So, in your opinion, there are a lot of investors out there who are playing on the motorway and taking their chances when perhaps they should be less complacent and a bit more conservative. That would be your message.
Well, we have to do what we have to do, but our president has already announced that most of the ground that we have to cover, we will cover at a constant pace of multiple 50 basis points hikes. And that's, well, we can be as clear as we have to be on that. And if I was a market participant, I would take our words quite seriously.
So that's 50 in February, 50 in March.
Well, I mean, where that sort of pace of 50 basis points hikes is going to end, I cannot say beforehand. But it is very clear that our president has used the plural S in her wordings. I am using the plural S here. So it will not stop after a single 50 basis point hike. That's for sure.
What about the risk of inflation, I beg your pardon, recession on the back of everything that's happening and this tightening cycle as well? We're seeing a lot of companies very, very concerned, despite the fact that actually they're retaining workforce because they don't want to lose people and then have to rehire them later on in the year when things don't look as bad. So in terms of the recession watch at the moment, where do you see us panning out, Klaas?
Well, we've seen a significant slowdown of growth in the second half of last year, and then also an increasing likelihood of a recession. Now, I would say whether we are going to have a recession in the euro area or not, it's too close to call. It could be a recession, it could not be a recession. But I think the more relevant factor for us is that we're probably looking into a year of slow growth. And we're looking into a year of slow growth also because there will be very little room for policy support. There will be no room for support from monetary policy. There will be little, if any, room for support from fiscal policy. Luckily, our labour markets are still very tight. So yes, the labour hoarding that you refer to, I very much recognize. That's also what employers are telling me. Yeah. They would be crazy to lay off workers, and those who did during the pandemic very much regret having done so. So I'm optimistic that that will keep demand going, but the economy will have to refine its own growth engines going into 23, 24.
So